Thank you for watching this video. Today we will be doing technical analysis on the S&P 500 for the week ending Friday, September 24th, 2021. And for this analysis, we will be using stockcharts.com. That is the charting service that I use and pay for, and I will leave a link to their site in the description box below this video. My name is Rodney Constable. I have over 30 years of investing experience, including over 25 years of experience trading stocks and options. I am a former financial advisor, a former vice president of a major mutual fund company, and I am the developer and president of Simple Market Signals at simplemarketsignals.com. We will come back to this chart in just a couple of minutes, but what I want to do is start with a high-level overview of what happened on the stock market and where we're at right now. So we are going to start with a weekly chart of the S&P 500. So on this candlestick chart, each candlestick does represent 1 week of trading, and this chart starts at the beginning of 2020. The lines on the chart, the simple moving averages, we have the 10-week moving average. That's the green line. The orange line is the 20-week moving average, and the blue line is the 40-week moving average. First off, it's kind of surprising, but the S&P 500 was actually up 51 basis points, 0.51%, so just a hair over 0.5% gain for the week during a very volatile week, and we'll talk about that. The S&P 500 did trade below the 20-week moving average, this orange line right here, on Monday. So we dipped below that and then climbed over the course of the week, and we're able to turn out a slightly positive return for the week. The S&P 500 did close at 4455.48, and let's take a look here at where we're at from our all-time intraday high. So the all-time intraday high back here was set on September 1st at 4545.85. So right now that is the all-time intraday high on the S&P 500. So where we closed on Friday the 24th at 4455.48 is 90.37 points down from the all-time intraday high. Guys, we're only down 1.99% from the all-time intraday high on the S&P 500. And I know for a lot of people, the news and everything out there right now just kind of feels a little heavy. And so I think a lot of people are going to be quite surprised by that we're down less than 2% from the all-time intraday high right now. So, let's take a look, though. I always want to know that if the market does roll over, right, and we're going to pull back to the 40-week moving average, what does that mean? So right now, the blue line, right, the 40-week moving average is setting at 4145.02. Well, that means that where we're at right now, we're 310.46 points above the 40-week moving average. That equates to a 6.9%. We're 6.9% above the 40-week moving average. So said another way, if the market does roll over and continue its downward trajectory, right, because of some of the negative news, there's some international companies out there, some pretty large companies that are having problems paying their debt payments. And so, I just like to know if, right, if we have a contagion effect because of something like this, what might the downside be? And the first thing to look at would be, perhaps a pullback to the 40-week moving average. And if that happens, we're looking at roughly a 7% pullback. In addition to the 2% that we're down right now, would be about another 7% pullback that would get us down to that 40-week moving average. And just to kind of point this out, guys, we haven't been below the 40-week moving average since back in June of 2020 right here. And in most years, a pullback to the 40-week moving average is common, right? At least once or twice during a calendar year, you'll pull back to the 40-week moving average, and we just haven't done that, since for over a year, right? So it's been a long time since we've pulled back to the 40, and just to put this in perspective, the last time we even had any trading, right? We had just a little bit of trading below the 20-week moving average this week. The last time that happened was almost a year ago. It was October of 2020. So it just shows how strong this market has been, that, we've had, we went almost a year without even trading, for one day below the 20-week moving average, let alone pulling back to the 40-week moving average, okay? But, just want you to know that if we do roll over and pull back close to that 40-week moving average anytime soon, we're probably looking at about another 7% downside. The other thing to keep in mind, guys, is we do have an upward trajectory on the 40-week moving average. So, it's possible that if the decline is a little slower in nature, takes several weeks or longer, that the 40-week moving average maybe gets up to the 4,200 or 4,250 level by the time the market pulls back. So that pullback might be a little less than that 7% that we're looking at right now. So a fast pullback, roughly 7%. If it's a little bit slower drizzle off, then the pullback might be a little bit less, as we have an ascending 40-week moving average, and assuming we have a declining stock market on top of that. So hopefully that all made sense. And now let's turn our attention to a shorter term, more granular chart, and we'll take a look at that hourly chart here in just a second. Okay, so this chart is an hourly candlestick chart of the S&P 500 that starts back at the 1st of July and, of course, runs all the way through Friday, September 24th. So again, each candlestick on this chart does represent 1 hour of trading. Have a couple of lines here. We have the 4305 line at the bottom here. We have a 4430 line and a 4440 line right there. And what we can see here is this past week, we pulled right down to this 4305 line and stopped just short of it, okay? And you can see that that was the tail of the candle right there in that in that circle where my cursor is moving. We pulled right down and stopped just short of that 4305 line. Now, what's important about that is when we go to the left, that takes us back to the first trading day of July. So in other words, we have round tripped, right? As of last Monday, we, made our way all the way up here, right? From the 1st of July to September 1st, where we made that all-time intraday high that we just looked at on the previous chart. And then over the last couple of weeks, we have pulled back, and we pulled back all the way to right at this 4305 line. So in other words, we round tripped the entire distance that we made, from the 1st of July. But what's really interesting, and I think perhaps encouraging, from that point, we ricocheted right back up and got above this trading level of 4430 to 4440, which has been a very important trading level on these short-term charts since back in August, starting really on August 6th, or even back in July, because we did get up to the 4430 level right here at the end of July, and that level acted as overhead resistance. We got rejected right there for a few days, finally got back up and penetrated above the 4430 level on August 6th, and then you can see we traded sideways for a few days, finally got above the 4440 level, got rejected there, pulled back, and then made one more attempt and finally got through that, and that's when we pushed higher and, of course, made that all-time high. So the fact, guys, that we're back above 4440, again, we closed at 44.55.48 for the week on Friday the 24th. The fact that we're above this 4440 level now, to me, is quite encouraging, and maybe this is as bad as it gets, right? Maybe that's all the trading that we're going to see, at least in the short term, below this this trading range that's been in place for a month and a half or so, between 4430 and 4440. So, next week, as long as we can continue to close, especially on a daily basis, above 4440, the worst is probably behind us, and we're probably going to be okay. However, if we roll back over and start to see trading below this very important trading level, 4430 to 4440, if we start to see especially daily closes below that, and then we start to fall back down to this 4305 level and then close below that, then we know we're in trouble. Okay, so for right now, really keep your eye on that 4440 level, and as long as we continue to close above that on a go forward basis, this may be the extent of the pullback in the market for now. Just to go back over, kind of recap though, however, if, things get worse and we start to really roll over, then, going down to this 40-week moving average, at some point we're going to pull back to the 40, right? It's just a standard, it's what I call a normal market action. At some point we're going to pull back to that 40-week moving average. But again, for now, As long as we stay above 44.40, we're going to be in good shape. Guys, stay with me for a few more minutes on this video because I have some super important and very exciting news to share with you, some stuff I've been working on for a while, and it's especially important to those of you that like video, and it's super important for those of you that are international viewers of this channel. I have some super exciting news to share with you, so please watch the balance of this video. Let me ask you a few questions. Do you manage any of your own money, including in your 401k or your IRA? Have you ever found yourself out of sync with the market, underexposed when the market is rising, or overexposed when the market is declining? If you answered yes to any of these questions, please pay close attention to the balance of this video because it could be worth a lot of money to you going forward. Do you have a stock market risk management and trend direction system in place? Do you know the various risk levels in the stock market on an ongoing basis? Do you know when it's safest to be in equities? Do you know when it's most dangerous to be in equities? Do you know the direction of the trend of the stock market? My system is Simple Market Signals. Simple Market Signals is market-based. There's no opinions, forecast, or guesswork in Simple Market Signals. It took me over 20 years to develop Simple Market Signals. I developed Simple Market Signals by reverse engineering the stock market, and I studied the stock market over numerous time frames, including numerous bull and bear markets. And what I found is that certain conditions exist during various market phases, and then I created simple, easy to understand signals around these different phases of the markets. And the thing is, guys, that most people don't know about or have access to the data necessary to do the research that I had to do to create this model. Simple Market Signals is a proprietary stock market risk management and trend direction model. And Simple Market Signals is perfect for financial professionals and individual investors. There's two major components to the proprietary model. There's a risk level signal and there's the general trend indicator. Let's start off with the risk signals. The risk signals are simply green, yellow, and red. The green signal has the lowest equity risk associated with it. And what you're going to find is that most all upward progress in the stock market will be made in a green signal environment. Said another way, it is hard to make money in equities unless the signal is green. The yellow signal means there's moderate equity risk, and sideways to slightly up or down price action is very common during a yellow signal environment. The red signal has the highest equity risk, and the worst sell-offs, including bear markets, will happen when the signal is red. A quick review of the risk signals. The green signal is the best risk-reward ratio signal for equity investors. And what you're going to find is that most upward progress in the stock market will happen in a green signal environment, as we see here. The red signal is the worst risk-reward ratio signal for equity investors. And what you're going to find is that the worst downturns, including the downturn in Q4 of 18 and the bear market in Q1 of 2020, plus the bear market from 2000 through 03 and the bear market of 07 through 09, all of those are going to take place in a red signal environment. Now let's put it all together and see how Simple Market Signals could have helped you during the fastest bear market in history, which of course happened during Q1 of 2020. We had a strong stock market coming into 2020, so the risk signal was green coming into 2020 and remained green for the majority of January. We did have a yellow signal for about 2 weeks towards the latter part of January, first part of February, and then, of course, the risk signal went back to green. And then on February 19th, we hit what was at that time the all-time high on the S&P 500. Again, that's February 19th. And then things started to unravel from there. But think about this. Just a few days after the all-time high at that time in the S&P 500, on Monday, February 24th, the risk signal went yellow. And then on Tuesday, the 25th of February, the general trend indicator went negative. And that general trend indicator had been positive since October of 19, okay? So right there, just a few days after the all-time high in the S&P 500, the risk signals started to tell you that something was changing, that there was increasing risk in the stock market. And by Thursday, February 27th, the risk signal was red. And then, of course, the market sold off hard from there. So think about this, guys. I mean, you talk about stress testing my model during the fastest bear market in history, that started just a few days after the all-time high at that time, the all-time high in the S&P 500. In 1 week, the risk signal went yellow, the trend indicator went negative, and then the risk signal went red, all in the same calendar week, actually within 4 days, right? Monday, Tuesday, and Thursday. So you talk about stress testing my model. Guys, I mean, this is the fastest bear market in history, and look at how simple market signals could have helped you during that time. With simple market signals, you will know what the risk level is and what the trend direction is in the overall U.S. stock market. And the proprietary model is based on S&P 500 data. The S&P 500 index really is the best proxy for the overall U.S. stock market, and it's the only index that has all of the data available that I need to run the model. And guys, it's not about beating the S&P 500. However, that is a possible outcome over time if the tools within the model are employed properly. It's about risk management and risk control. It's about controlling your risk exposure rather than letting the whims of the market dictate your future. The best fit for simple market signals is an investor or a financial professional with at least a 6 to 8 week plus time frame that they're focusing on. If you're a shorter term trader or a day trader, simple market signals may help you a little bit, but the reality is that the best fit between simple market signals and a subscriber is somebody that has at least a 6 to 8 week time frame or more that they're focusing on. The signals are delivered to subscribers, our members, in our weekly video. A Simple Market Signal subscription, a membership, is now available to the entire YouTube global viewing audience via a paid membership to this YouTube channel. Let's talk about the membership details. So the video or YouTube membership to Simple Market Signals is $19.99 per month. And that's a recurring billing, right? So every month you're going to be billed $19.99 per month. Guys, that's less than 67 cents a day. And this will be billed monthly on your credit card through YouTube, which of course is owned by Google. A video membership to Simple Market Signals via a membership to this channel will give you access to all the information necessary to be successful with Simple Market Signals. With your membership, you will get weekly updates on our proprietary risk level signal on the overall U.S. stock market. You will also receive the proprietary risk level signals on all 11 major sectors of the S&P 500, and you will receive the proprietary general trend indicator signal for the overall U.S. stock market, and you will get all of these each and every week. So just to confirm the signal update frequency, we will upload a new video each week updating all signals within our model, regardless of whether there's been any signal changes or not. And that video will be uploaded each weekend, generally on Saturdays before 5 p.m. Eastern Standard Time. But depending on our production schedule, that video could be uploaded anytime over the weekend. We will also add a new video to the member area if there is any signal changes in the middle of the week. So if there's a signal change on either the overall risk signal or the general trend indicator, we will also give you midweek updates when necessary. But generally, each week there will be one video updating everything and confirming what the signals are for that time period. And again, those videos are generally uploaded on Saturday, and our goal is to get it out before 5 p.m. Eastern Standard Time. However, again, the video could go out anytime over the weekend. So again, just to confirm, all signals are updated every weekend. Major signals will be updated midweek if there is a signal change. As a member, you will also have access to best practice videos for successful implementation of the risk signals and the general trend indicator. And you will also have access to best practice educational videos for tips on successful investing. And this video library will continue to expand over time. So as part of your membership benefits, you will have 24/7, 365 access to all signals and, of course, the charts from the past all the way to the current, and you will have access to all of those charts up to the present and, of course, any future charts, right? We update those every week. You will also have 24/7, 365 access to all related educational videos. And, of course, the membership is available globally wherever YouTube is available. And any of you that have looked at this in the past, you know that that's new. In the past, I could only offer this to U.S. citizens, but anybody that now has access to YouTube on a global basis can have access to Simple Market Signals, can have a subscription, a membership to Simple Market Signals with this new business model running everything through the YouTube membership area. And of course, all of the information is disseminated via video. There's no print or email with this particular membership. Now let's talk about some additional membership details. Guys, you can cancel your membership anytime, okay? And if you do cancel, you won't be billed for the next billing cycle, the next month, if you do cancel. However, your membership will remain active for the balance of the prepaid period, the current month that you're in. If you do cancel, there won't be any refunds for the balance of the prepaid month remaining after cancellation, and there's no free trial period. And of course, this is controlled by YouTube. This has nothing to do with me. These are the parameters that YouTube sets for any membership that you have that's connected to the membership area of YouTube. A few important details. There won't be any changes to current subscribers of the emailed version. For those of you that are domiciled in the U.S., you're a current subscriber to Simple Market Signals, nothing is going to change for you. And there's no change to the free weekly market videos that I'm putting up on YouTube. So if you've been watching my videos, I don't know, 250, 260, whatever are out there now over the last few years, I've uploaded these. I'm still going to be doing that every week. So I'm still going to be putting out that free weekly video, giving you a brief update on the markets. And again, if you are a current subscriber to Simple Market Signals and you receive your information via email, nothing is going to change. So let's review the membership details. The video membership to Simple Market Signals through this YouTube channel is $19.99 per month. That's a recurring billing, right? So YouTube is going to bill you every month at $19.99 a month. Guys, that's less than 67 cents a day, okay? And again, it's going to be billed monthly on your credit card, and you can cancel anytime. So try it for a few months. If you don't like it, you can cancel. And remember, this is an investment in yourself and your financial future. I have had numerous clients tell me that they've made tens of thousands of dollars or more in 1 year because of their subscription to Simple Market Signals and the information that they get. Guys, you think about the ROI, right? The return on investment like that, that is amazing, right? When you think that you could spend a few $100s a year and make thousands, tens of thousands, or perhaps even more, depending on the size of your account, based on that small investment. So, remember, there's always a cost of doing something, but there's always the cost of not doing that thing as well. And when you think about the decision of whether to become a member to this channel and have access to the Simple Market Signals information, there's a cost, right? $19.99 a month for doing this. But when you look at the cost of not doing this, guys, for most of you out there that are watching this, the cost, the lost opportunity cost, the profits that you're going to give back when the market pulls back, right? If you don't have this information and act on it, or the cost of not being in the market when there is a green signal and the market is advancing. The cost of not having this information for most of you is going to be much, much higher than the $19.99 a month, the 67 cents a day, right? The less than 67 cents a day that it's going to cost you to be a member of this channel and have access to this information. And to become a member of the channel and get access to the Simple Market Signals information, you will need to go to the Rodney E. Constable Stock Market channel. So depending on how you found the video, you may or may not be there, but you need to make sure that you go to the Rodney E. Constable Stock Market channel, and then you're going to click on this join button. Now, if you're not signed into YouTube, you will need to sign into YouTube, okay? So you'll need to sign in. All right, and then once you're signed in, then you'll see this box pop up, right? Get access to exclusive perks when you become a member. So you click on the join button and you will see the information here, what you're going to get with your subscription, of course, your membership. And then you click on the join button and you want to add your credit card information. So as you can see here, you can pay with either a credit or debit card. Enter your card number, of course, the month and year of expiration, security code, cardholder name, and your billing zip code. So I'm going to fill all of this information in, and I will be right back. So once you hit that buy button, which is in the lower right-hand corner of that box, that previous box, you will then get this pop-up. Welcome. It's great to have you as a member. So then you can click on the See Perks. So once you fill all that out and your membership is established, then you will have access to the membership area where you will be able to see the perks, right? And then you go over to the community tab, and this is where you will have access to the various videos, and you just click on those and it'll pull those up. Okay, so I'm going to back up here, and so this is where all the training videos will be, as well as the weekly updates to the Simple Market signals that will be under the community tab. And that's all it takes to become a member. It's quite simple. So join now to immediately start benefiting from this proprietary information.